Hey, good morning, everybody. Good afternoon. I guess if it's noon on the East Coast, how the heck are you guys? Um, I am thrilled to be filling in today. This last minute, something happened, and they said, "Can you help?" And I said, "Sure." So I haven't had a chance to prepare like I would normally prepare, but you know what? Truth be told, I've been preparing my whole life for this. That's that's reality, guys. That's reality. And uh, you are kind of a product of what you put in. If you put certain things in, you get certain things out. If you don't put certain things in, you can't get them out. So I've spent enough time in my life dumping things into my head that I think we can make ourselves have a real good time today for the next 45 minutes or so, um, without having to strain too hard about it. So I am happy to be here. Let's go ahead and I'm going to share the screen. This will stop others sharing. Yeah, sure. Yeah, I do. Let's go right here. And give me an acknowledgement if you see the opening page for the Trading Coaches Playbook. My little picture over there in the corner. That's a pretty old picture. I don't wear my hair like that anymore. Haven't for a long time. All right. Good, good, good. Well, let's see if we can get it to change slides. There you go. Guys, our meetings always start out with a recommendation, a reminder, and a caution. Recommendation is that you always take things with a grain of salt. In other words, you're being given training, education, and those things are opportunities for you to do something with. Don't just swallow things whole. As good as I think Rob's program is here in terms of the content he provides, having known him for decades, as honest as I believe I am, and as pure as my motives are in my mind, you shouldn't assume anything. Assume is a funny word to spell if you know what I'm talking about. So the caution here is that we are giving you education, training. We are not guiding you into any particular trades or positions. The market has risk. It always will have risk if you're going to be in it. And so your job is to learn how to manage that risk and to take what you've been taught and practice it carefully in a way that you can survive. You're going to ultimately make your own trading decisions. No one should be making them for you. Um, and therefore, that's our disclaimer. We just want to make sure that you understand that we are trying to give you the best information, education, training that we can. We are not giving you specific advice. There you go. All right. Here again is just the example of how much effort and work Rob puts into putting content in front of you guys. I tip my hat to it. He just really does an amazing job. This is one event coming up that you should take advantage of. I saw the ads for this come through the email. This is a reminder as well. And again, guys, take advantage, drain everything you can from folks that have got good information to give to you. Now, today, we're going to do this. There's an old adage that is connected with an old late night show. My whole adult life, you've been able to talk about Johnny Carson and everybody knew exactly what you're talking about. Now I've lived long enough to where I can talk to people about Johnny Carson. They go, Johnny who? And some of you are laughing because you can relate to it. Others are going, Johnny who? But one of the late night, the king of late night, literally the gold standard, better than Leno, better than anybody else, was Johnny Carson. And he had a segment on his late night show that he called Karnak, and he would hold an envelope up in front of his head, a sealed envelope, and he would give the answer, and then he would open it up and read the question. It was pretty funny. It was entertaining. And one of the euphemisms they put on that was he would often um, talk about playing Stump the Dummy, where you just ask random questions and see if you could stump somebody. And so somebody would maybe present themselves as an expert, and then people could ask them questions and see if they could ask a question that would stump them. It was just a game. It was for fun. Um, so I thought that I would utilize that for the platform today, in as much as that I didn't have a specific. I usually put a couple hours of preparation into doing a 1 hour class at least, um, but not today. But with everything that I've um, plugged into my head over the years, I think we can do this just fine. And I thought I'd lay out just a menu. Um, Trading psychology, tripod trading, candles, patterns, trading plans, um, which is trade management or risk management. I guess I could have put risk management under trading plans. But technical analysis, support resistance, finding targets, etc. Anything is on the table. Now, if you want to talk about marriage and raising kids, yeah, I'll field some of those questions too. But if we keep them oriented to the market, basically anything you can think of. And if I don't have an answer, I'll tell you, but I usually can and give you something of value based on what I've been able to learn and catalog in my life and my experiences in the market. So this is going to be an open forum. We do have the charts up, and we can switch over to charts at any moment. But I just would love to field any questions that you have on anything that's on the table and anything that might be market related that's not up there on the board. As long as it's market related, I'll give it a shot. And if I've got something that can add to your body of knowledge and increase your skill level, your understanding, um, it's yours, and it's just whatever I can give you. I'm happy to do it. So we've got about 40 minutes. Start formulating questions of anything related to any of these subjects. Okay. And while you're doing that, what I want to do is just shift over and bring the charts up. Wait. How'd that do that? Let's go back here. All right, there's the chat. Open this up. And we'll go to share screen. There we go. That's something that looked a little bit odd there for a minute. So just tell me real quickly there, guys, are you seeing the chart? Okay, good. Good. Thanks, Jim. Okay. Guys, we're looking at markets that continue to push higher. You know what? While you're formulating questions, please do that and get ready to write down any questions, anything you want to discuss. I am going to segue here a little bit, just because I am really, really frustrated, and I will tell you this right now. I am ticked off. I lived through Katrina. You guys did too. I saw the kind of news coverage, the kind of nonstop, all day, every day coverage of this horrific disaster in Katrina. Okay. Right now, the aftermath of this Hurricane Helene is as big or bigger. I would argue much bigger than Katrina. And I am just livid with the lack of coverage that has been given to this in the media. I am livid in the response of the government. If you go online and listen to what is happening, listen to the rank and file, the people, the actual normal people like you and me that would jump out of windows, that would go climb through burning buildings to help your neighbors that were suffering and dying. And I'm going to tell you right now, I am following this very close for the last 5 days. The government response is abysmal. Somebody ought to be shot for this. And I say that not literally, but somebody ought to be hanging by their thumbs, fired. I cannot say it in more distinctly livid terms. It is a disaster. It is a travesty. And you have got people that are out there we don't even know, and there's hardly anybody looking for them. There's a small army of private helicopters flying around those mountains trying to find people. There's 2 or 3 government helicopters. I have heard interviews where people are standing on the ground saying, I'm looking at a whole bunch of aircraft, and I'm talking to the people saying, why aren't you guys in the air? This is government stuff. Um, it's not a big force, but it's significant. And they're saying, we can't get orders. We don't have approval. Days ago, people are dying. I've heard of people taking their private helicopters, flying in, picking up people who would be dead within the next 24 hours because of medications and injuries, and they're picking them up. They're flying into the mountains and they're saying, where is the government? And yesterday we had this disgusting, disgusting revelation that FEMA says, well, sorry, we're out of money. You know, we're doing the best we can with what we got. And I'm not going any farther politically, but I'm telling you, that is not an answer. And when you look at what the money they say, well, we spent the money on this, I'm going nuts here, guys. And so I'll stop. But I'm going to use this platform. And if somebody wants to fire me, I don't care. But there are people, and I know some people in that area. There are so many people that are hurting we don't even know. And the government response is absolutely disastrous. And I'll tell you what, if there's anything you can do, I'm donating to people that are on the ground helping there. But it's just, I absolutely hate. I mean, I get righteous indignation when I see this kind of travesty, and the excuse from our government of, gee, we're out of money because we spent it on this and this and this, primarily on foreign wars. And what's FEMA doing, funneling billions of dollars into illegal immigrant support? What's FEMA doing? How come FEMA money is being siphoned off to foreign countries? And here our people are suffering, and the answer is, sorry, we ran out of money. Oh my gosh, just cannot say it anymore. There, I'm done. That's my rant. But you guys didn't ask your questions quick enough. That's your fault. If you would ask your questions, we would have been on to other stuff. But I had a minute there, and I just saw another headline that reminded me of some of the stuff I watched last night, and I'm just beside myself. If this is not an indictment on the way that this current administration is handling things, if this isn't just an absolute stamp of, I digress. I'm sorry. But I just cannot stand this kind of abuse. And these are our citizens, our good people. And because they're hill country people, maybe that's the big problem. They're in, they're just hillbillies, right? They're just in that part of the country. I don't know, but it just makes me want to throw bricks through windows. All right. I'm calming down here. Sorry. Anyway, I've got a chart of the S&P 5 up here, looking at it through the window or the eyes of the SPY. And what you have here, guys, is a classic pattern. I'm going to take this chart and slide this over, and I'm going to suggest that you pay very close attention to this area. And I'm going to narrow this up here just a little bit, because this is what the focus is now. Okay, July, August, and September, 3 months. 3 months, you had a very significant behavior of the market, topping once, twice, 3 times, 4 times. You have 4 visits to this area of resistance, and you have rising bottoms. So I will tell you that when you have rising bottoms up against a resistance level that is horizontal, it's called a rising wedge or an ascending wedge. And if you can imagine somebody coming up and taking a run at a door and smashing into the door, and they don't quite break through the door. They back up, but they don't back up as far as they came on the first initial run up. They back up about half the distance, and then they take another run at it and they smash into it. And the door buckles and it cracks, but it doesn't quite break. And they back up another few steps, about a third to a half of the last run up, and they come up and they smash it again, and the door rattles and it cracks and it breaks open, and they take one step back and push their way through. That's what an ascending wedge is. If you want to put some emotion and some human interpretation into it, that's what it is. Look at the run up that started in April. So we go the middle of April through the middle of May, middle of June, middle of July, 1, 2, 3 months, and you get knocked on your fanny at a new all-time high. It pulls back about halfway. And then in less than a month, you get a sprint and you smash into that wall again, and it cracks and starts to break. And you give it a little push and it rattles and it starts to crack again. But you back up a little bit, but now you don't back up very far. You don't have to get a big run at this. You've got a sense that this is going down. And you turn and you take a quick 3 or 4 steps and you smash into it, and the whole thing starts to cave. You stand back, let it fall, and then you step through the door. That would be not a strange analysis, not a strained interpretation of what we're seeing here. Now the question is, what's on the other side? You get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of celebrating on the other side, but you don't get a big run up. Look at the run up from April until the middle of July. Look at that run up. Look how big that was. The pullback is about 50%. Look at the run up on the second approach. Then you pull back about half of that, and then you take and you do another run up and you bust through the other side. One thing that you should be recognizing as the run-ups, the bullish runs, my mouse isn't moving. You're right, it's not. I wasn't moving it. I was keeping it out of the way. But this run right here, if you're looking at it, is about half the size of this one, which is about half the size of this one. So while you're making theoretical progress and you just broke through, there's a big question mark. How much push is there? How much bullish sentiment is there left? Look at the distance that was covered. That's huge. Then you do half of that again. Then you do half of that again, and you push through the other side. And this run up before the pullback is smaller than this one. So forget the resistance now. Just look at the distance of the vertical run for the bullish run. It lasted for 3 months, and it was that big. The next one lasted for 3 weeks, and it was half the size of that. The next one lasts for about 3 weeks, and it's half the size of the one before it. So what is that telling you? Well, to me, it's telling me that the gas and the energy is running out of this. Okay. Now the question becomes, are they just resting before another big leg up, or are they out of gas? Now, to answer the question, we look back and we look for patterns, and we say, in bullish run-ups to the S&P 500, we can have long extended run-ups, and then you have corrections. You have a period of resting. You have a surge, and then you have a rest. A surge, and then a pullback. Okay? Good news or bullish activity is always overdone. It's always pushed to the very limit, and then you get a retracement. That's just the market movement. You know that. Okay? So the question becomes, what kind of a pattern are we looking at right now, and what could be expected? Well, again, look at the size of the first run-up, the second one, the third one, knowing that patterns go 3 to 5 times. Could we get another run-up right now? And the answer is, yeah, we could. Sure, we could. Patterns go 3 to 5 times and then break down. That's the surge and the retracement, the push and the retracement. Okay. You have a new dynamic here. So you have that normal sequence of a bullish run or a bearish run that will go 3 to 5 times before the pattern breaks down. Now what you're looking at is you throw in the dynamic of a major resistance at an all-time high. All right, we've just broken through that all-time high. The question becomes, now what? Is there something on the other side? Okay, is there something on the other side? Is there enough energy to push a fourth run or a fifth one? And the answer is we don't know. But we do have another characteristic happening in here, which is this resistance. You have major resistance. It failed to be able to get through this level once, twice, 3 times, 4 times, and on the 5th try, it breaks through. Now you may look at this and say 1, 2, it broke through on the 3rd pattern. Okay, we can argue semantics, and there's no really argument here. I'm just saying, if you look at what happened here, we did a little pullback, we tried again, I said, no, not quite. Okay, I'm counting those. 1, 2, 3. We get here, we pull back again. These 2 big bearish days right here at the end of September were an acknowledgement that we've hit resistance and we can't break through. Okay. Brenda said you're on yesterday's chart. Well, yeah, I am, because when you update these charts, they update to the last complete day. They don't show intraday, at least not initially here. Okay, so you're right. It's throwing the last completed day. That's okay. The question is, what happens now? We are in an area where we've pulled back to the support or the resistance, and we're wondering, will it push through? Will it push through and drop back down? Or will it bounce off of here? Will it use old resistance as new support? That is a very classic behavior. It's a very bullish behavior if you're looking for a continuation, for a 4th leg. Again, patterns go 3 to 5 times. Could we get a 4th? Could we get a 5th? Yes. Is that normal? No, it's not, actually. That's why they say 3 to 5. The majority of patterns end after 3. You may have a failed 4th attempt, but to have a 4th or a 5th run does happen. That's why we have to allow for 3 to 5, but they're not normal. They're not the norm. They're the exceptions, but they happen often enough to where we allow for it. But most are about 3. Okay, most are about 3. Brenda said the SP should show today. Well, all I'm telling you is I just updated it as we were, in the half hour before class started. The market was open. I'll do it one more time for you. We'll see. We'll see. All right. So, but the point is that is normal behavior. And so right now we're showing strength. It's a bullish run, but keep in mind, this is the completion of the 3rd surge. Will we get a 4th and a 5th? It's possible. It's not abnormal, but it's not normal. Okay. By definition, I was being facetious there, right? Yeah, not really. It's not common to get a 4th and a 5th, but it's not impossible, and it can happen. But traditionally, things will break most of the time after about 3 times. Now, that said, I'm going to give you a powerful lesson in charting right now. Whenever somebody talks about things in generalization, be very careful. Okay? Be very careful, because you should never trade off of generalizations. You use generalizations, you use axioms, you use market maxims. You use those as a framework, and then you always personalize. Guys, you always personalize. Everything I've learned in the market is that you drill down from the most broad to the narrow. And when you get to the narrow, that's where you make your decision. You make your decision based on what that particular stock or market or index or whatever it is you're trading. You do what it's actually doing right now, not what things normally do in this family or in this group. You always go down to the individual level before you pull a trigger. All right. So when we look at this, We're looking at this, and you could very well say, okay, I see this, what you're saying, Ryan, but has this ever happened before? Well, that would be one of the things you should look for. You look for a similar pattern. If it's done this before, how did it work? What happened next? Okay. You don't say, well, when you see this pattern, this is what happens next. Bull crap. Baloney. When you see that pattern, it happens sometimes. It happens on some stocks. It doesn't happen all the time, and it doesn't happen all the time on all stocks. But what if it happened 7 out of 8 times on this particular stock in the past? Well, then you got something. Well, it worked 7 out of 8 times on another stock. Fine. But what about this one? Well, I don't know. Well, then you shouldn't be trading it. You go back and you look before you make a generalization that says, well, when this happens, this is what happens next. Sometimes. Does it happen on this stock? Show me. Show me. Let's look. Okay. Let's look back. When we've had topping patterns, have we had topping patterns where we've had resistance in the market before, in the S&P? Okay. We're looking back and say, where is the pattern that matches what we're doing right now? Where is it? I'm not seeing a good close correlation there in the recent future or the recent past. I can see something over here if you can follow my pattern. What about this right here? Here's an all-time high. We hit it once, we pull back, we hit it a second time, we pull back with a lower bottom, so it's a W pattern, and it comes up and it busts through, and it never looks back. It does come back and test right there. It's a little hard to see, but it does. It comes back and tests resistance, then it takes off and never looks back. We have another big run, big blasting run. On this big blasting run, look at this. We hit it once, we hit it twice, we hit it 3 times, and then we break through. Whoa, what does that mean? Well, it comes back to test. There it goes, and it breaks down. This was a huge run up. This was the correction. Makes sense. Okay, we come up against that same resistance right here, and if we zoom in on it a little bit, come on. I've got an open window somewhere that I can't see what's going on here. There we go. If you can see now, you come in, you hit it once, you hit it 2, you hit it 3 times, then we break through and we keep on going. All right. So do we have patterns similar to this right here? And the answer is yes, exactly. Not exact, but similar enough. Similar enough to where we would look at this, and I would say, watch very careful what happens next, because we have examples of testing that resistance and then taking off and never looking back. We also have examples of testing that resistance, breaking through, coming back, and then falling through. So you have both. So right now you don't have a 6 out of 8 or a 7 out of 10 pattern. I'm seeing both. So the question is, what's it going to be this time? Answer, I don't know. I don't know. Somebody type something in. My screen is acting a little bit weird. I want to make sure that it didn't die while I was talking to you, and I'm unaware that I'm talking to the wall. Okay, Brenda says we're still there. Okay, good. All right. Okay, so the point is that right now we've got a pattern that is a classic pattern, and we have evidence of both types of behavior in the S&P. Okay, this one's different right here. But we have 2 examples that I showed you in the past that are similar to this, and one keeps on going, and the other one takes a big breather, takes a big rest coming back. So what's the S&P going to do? I don't know, but I can tell you this. Whatever it does next will be significant. Now, if you want to jot some things down from today that are worth writing down, this is going to be one of them. Okay. A pivot point, when I use the term pivot point or an inflection point or whatever you want to call it, there's a lot of different words you could put to it. But when you're at a decision-making point where something significant can happen, that's all it means. Does it mean from a pattern standpoint it's going to go bullish or bearish? No, that shows you what could happen. And you can even look at the past and say, well, based on what's happened in the past, there's a likelihood that it'll do this. Okay, fine. But if it's not 100%, then all this is a significant point. This is what I call a pivot point. Something's going to happen. And it's either going to keep on going, it's going to bounce off this point and keep going to the upside, or it's going to break down. But a pivot point means whatever happens next is significant. It's a significant move. There are plenty of places that aren't significant. There are plenty of places where what's happening doesn't really mean anything. It's not a significant event that's happening. But this is. There's been a lot of energy. Now, when I talk about banging your head against the wall, I've seen some people that think that that's cool. I mean, they like banging their head against the wall. They think for some reason they get some jollies out of it. Most people don't, but some people do. But the point is that when you hit this wall right here, in the market, there was something traumatic. Was it good or bad? And the answer is yes. It was good and bad. Some people rode this wave up and jumped out and cashed in big time. Some people got in 3 days before, went bullish, and then got clobbered on the pullback. And several other variations of those emotions happened. It was traumatic. It was celebrating in the end zone, popping the champagne cork, and it was also throwing stuff in the air, kicking things, swearing I'll never market again. I'll never trade the market again. I mean, the whole range of emotions happened when that pivot point happened. When you revisited it again in the end of August, and it came up and it hit and pulled back, tried again, pulled back, tried again, pull it. 3 times it came up there and it just banged around just like it did in July. And at that point, more emotion, but of the same options or types of emotions, but more was poured out. More celebration for the people that rode that bottom dip up, more celebration for those who had maybe stayed in for the last 6 months. And when the market turned and headed down, celebration for those who said, I'm done, I'm out. Oh, I nailed it again, perfect. But there was horrible emotions connected with those who just got in finally the end of August because it looked like we had another big run going and they thought this time it would break through, and it turned around and cratered for 2 weeks, pulled back sharp, their positions lost. And if they bailed out in September because the market failed to hit through that top and made a double top, oh, double top, that's negative, that's bearish, I'm getting out. And then it turns around, breaks through, and sets another all-time high. Guys, there's emotions and blood and celebration and champagne and confetti all over the field, right? Blood and carnage, confetti and champagne. It's all there on the field. This is a pivot point that we are addressing again at this 561-ish point. 560 to 565 in this case. What's going to happen? I don't know. I don't need to know. I need to know that it's a significant point and that whatever happens next will be significant. So I could position myself to simply be ready to go either direction and recognize that there is a big fight going on at 560 to 565. It's a brutal place to play. If you're going to be in here, you could get your head handed to you, or you might score a big one. And as long as you calculate and allow for that risk, you can play here. Otherwise, you take a different position. You say, I'm going to wait and see who wins the skirmish, and then I'll bet on their ability to continue, either down or up. Okay? But if you're going to get in there, you got to recognize it can get nasty because you're you're climbing into a washing machine and putting in $5 at the laundromat, or you're climbing into the dryer and having your friend put in $5. It can be fun or it can be brutal, but something significant is going to happen. All right. Pardon me. So that's what we're looking at right now in the market. Okay. I don't see any questions. Do you guys not have any questions? Maybe you don't. I'm going to go back to the list here. And these are the things that I'm prepared to address with you on anything having to do with trading psychology, which I gave you a little bit in terms of understanding the market. You can put a face on the market. It's a bunch of real people doing real trades. Yes, there's algorithms and bots in there doing it, but they're also reflecting human nature. Okay, patterns still exist. We can talk about tripod trading, the three personalities that is required to be able to trade successfully, and how you can try to channel those three different characteristics, character profiles. Talk about candles. We've talked about patterns a little bit. We can talk more. We can talk about risk management, trading plans, and we've talked a little bit about support and resistance and targeting. We didn't do targeting too much, but we did support and resistance. So, question. How can I help? I hope somebody's typing, because crickets means that there's nothing. You already know everything and there's nothing to ask. Come on, this is Stump the Dummy. See if you can stump me. Throw anything out and we'll see if we've got an answer for you. Brenda says, I kind of get stuck when it comes to using pivot points. Okay, so Brenda, expand on that a little bit more. Tell me a little bit more about that. What do you mean by that? What does get stuck mean? And if you want, I don't know if it's possible you guys could use your microphone, and sometimes it's easier to say it than it is to type it, but I don't know if Suzanne has got the ability to let you do that, but I hope you're typing. Give me a little bit more to work with on kind of get stuck. Not sure what that means. Guys, first of all, understanding, as I said, I'll just embellish it a little bit more. A pivot point simply means there is a reason for the bullish and the bearish sentiment to come into a equilibrium. Okay. A pivot point is where the bullish and the bearish momentum reaches an equilibrium. And there's a reason for that to mean something. Okay. If I throw a tennis ball up in the air and it comes back and lands on my hands, it traveled up and it traveled down the same distance. But at some point, it came to a stop, come to a dead stop. And then it reversed and came back down when I threw it up in the air. If I throw it up against the ceiling, I know exactly where that spot is. And if I throw that ball up against the ceiling and it bounces off the ceiling back into my hand, okay, I just identified a pivot point. Now, if I take that ball and I grab a steel ball bearing instead of a tennis ball and I throw it up at the ceiling, it may hit and blast right through the sheetrock because it's a solid ball. I can't tell. It just, from a distance, it's a ball. It just is a round ball. I throw it up there, and if it bounces off the ceiling, comes back to my hand, and I throw it up again and it bounces off the ceiling and comes back to my hand, and I do that 3 times, there's something going on there. But at each time it's breaking through the ceiling a little bit more, then you got to get the idea that one of these times it's going to go flying right through. And will it stop once it breaks through and come back and fall through the sheetrock again, come back to me, or will it stay up there and keep going? I don't know. That's a pivot point. That effectively is a pivot point. We see that something's happening for a reason, and whatever comes after that will be significant. It'll either come back and not want to go up again, say, no, we're done, or it'll break through and stay there. Brenda says it's like resistance 1 through 5 or support 1 through 5. Okay, I'm still not sure how to answer your question, but once you identify a pivot point, it is a pattern. And the 3 to 5 times works whether it's up against a horizontal resistance or a horizontal support, or if it's in a trading trend, if it's in a trend, an uptrend or a downtrend, you still have 3 to 5 times as the pattern expectation. And then you take that generalization and you say, yeah, but on this stock, what is it? And if you look back, Brenda, and you find that on this stock, patterns rarely ever go more than 3 times before they break down, now you know how to trade this stock. How do you trade the S&P when it comes to the 3 to 5 pattern? Answer, you don't know. You don't know how. Unless you go back and you study the S&P and you find out, okay, when it gets into an uptrend, when it gets into a support resistance, when it gets into a wedge pattern, when it gets into a channel or a sideways rectangle pattern, how does it behave? Find examples. And if it tends to behave the same way repeatedly, now you know how to trade it. That's the whole point I'm trying to make here. You use these patterns to the degree they make sense. If you can find a behavior in a particular stock, not a generalization, the generalization happens because it happens over a lot of stocks, but not exactly the same way. You say, okay, I get the generalization. Now, how does that apply to this particular stock? That's where trading decisions are made. They're not based off of the generalization. You say on this stock, when it trades into a wedge, it repeatedly, like 6 out of 7 times, 8 out of 10 times, whatever that is, if you can find that kind of correlation, now you've got some confidence in how to set up your trade on that particular stock. That's the message. That's how you deal with pivot points. You find something where whatever happens next is likely to be important. Then you look backwards to see how does that relate to this particular stock? How much credence should I put into this behavior on this particular index stock? Whatever it is, ETF, whatever you're playing, you take the general and you boil it down to the specific on that particular stock. And you don't listen to CNBC and you don't listen to anybody else. Once you zero down to, I understand the general pattern, I understand what it means, and I've looked at this stock, and yes, it happens. And in this particular stock, this particular ETF, this particular commodity, this is the way that behavior tends to work. And it's right, or it's consistent about 5 out of 10 times. The other 5, it just is all over the place. So what do you do with that? Nothing. There's nothing there to do. There's no pattern to trade. If it's right 50% of the time, it is a total crapshoot. And why would you do that with your money? You want to look for and find patterns that you can trade off of. And that means there's got to be some consistency to it to justify the risk. All right. Let's see. Jennifer, I'm sorry about that. Really sorry about that. That was just for a little quick rant. Now we're doing good stuff. I hope that that you're sticking here because all we're talking about is good stuff. Brenda says that's good. Okay. Alrighty. What else? Tom says, what patterns are best to trade off of? Tom, you're gonna find my answer a little bit odd, but it's gonna relate to what I just said. The patterns that are best to trade off are the patterns that have the best history. In other words, I can't give you that answer because let's say it's an ascending wedge pattern. An ascending wedge pattern may work well on 1 or 2 or 3 stocks or 1 or 2 or 3 indexes that you can find. And then you go to another one and it doesn't work at all. And that's the fact. None of these patterns are universal in their behavior. None of them. But some of them work extremely well. But Tom, it depends on what you're applying it to. So if you find an ascending wedge pattern in Microsoft and you look back and you say, wow, almost every ascending wedge pattern in Microsoft over the last 2 years resolves itself this way. Tom, you've got gold mine. You found a goose that's laying golden eggs. So what patterns are the best? Well, the ones that work the best. And I know that's a facetious answer, but it's true. It's true. There is no magic pattern. There's no magic candlestick pattern. Any candlestick pattern that anybody wants to show you, if they say this is a magic pattern, when this happens, look out. If they can't show you that that happens on every stock, on every index, on every ETF, and it's happened 9 out of 10 times, 8 out of 10 times over the last 5 years, they're just wasting their breath and your ears. There's nothing there. It's baloney. Tom, does that make sense to you? I mean, it's an honest and very sincere and a very serious answer. Find the pattern and play it till it breaks. That's one of my mantras. Find the pattern and play it till it breaks. Find a pattern, look and see if you can find it other times in that stock's recent history over the last 1 to 2 years. If you find 5 examples and 4 of them behave a certain way, you've got something. You got an 80% pattern, not 100%, but it's an 80%. Okay. You can lean into that carefully with a big expectation that you've got a 4 out of 5 chance, an 80% chance that this time it'll behave the way it's done in the past. It might not, because 2 out of 10 times it didn't, but 8 out of 10 times it did. So now you've got honest, realistic expectations. Tom says that was a good answer. Well, I appreciate that. I think it is, because my experience says that you can only count on the application on the individual stock, index, commodity, whatever you're trading. You take that general rule and you say, yeah, but how does it work on this one? And if it works good, you trade it that way. If it doesn't, it's nothing personal. If it doesn't, it doesn't. Okay. All right. We got time for a couple more. Any other questions on anything in that list? If I were to prioritize any of those items, what do you think I would? So you guys have been around me a lot. Of everything on there, what do you think would be number one? If I included, now this will be a hint. Sorry, this will be unfair. Well, that's just curious. What? Okay. Um, if trading plans includes risk management, I'll just tell you the number one skill set of everything on there, everything is risk management. You have to be able to survive trading to be able to continue trading. And risk management is number one. Everything else sequences underneath that. Tom says, if I can summarize pattern that happens 4 out of 5 times over the last 1 to 2 years. Yeah, exactly. And the last year is more important than 2 years ago, Tom. And the last 6 months is more important than a year ago. Why? Because it's more reflective of how the people that are trading that stock, not the stock, it's reflective of the people that are trading that stock, how they're behaving. If you can find patterns over the last 6 months, that is more important to what happens next week than something that happened a year ago, and more important than something, and that's more important than something that happened 2 years ago. Okay. But you're still looking back for the history, and you're still looking for something that has a consistency that is enough to justify you taking a risk. Brenda says, how's my daughter doing? Well, I would tell you that her first 2 rounds of chemo went extremely well, and we've been happy with that. Except the last 2 days have been not good, and we're not sure why. She's had a really rough last 2 days, and her doctor's been really slow getting back to her, so she's just suffering. So I'm not going to segue too far off on that, but the fact that you remember that, I appreciate that, Brenda. And she's the subject of our faith and prayers every day. Okay. Guys, I want to apologize. Apparently, and I knew I risked this, but I took a risk on it. I'm sorry that I bothered or offended Jennifer with my rant about what's going on with that hurricane damage, but I just hate injustice. I'm sorry. I hate injustice, and I hate indifference, and I hate political games, and especially when it hurts people. In this case, is killing people, literally killing people. And these are good people. They're not just dumb hillbillies. That part of the country is heartland, and I hate to see injustice. So if I offended any of you, I apologize, but I couldn't help it. It's done. Um, anyway, guys, if you don't have any more questions, we'll let you go. You've got busy days, so do I. But I just was laying this out for anybody that might have any questions at all. Okay. All right. All right, Tom, thank you. Appreciate you guys. God bless. Have yourself a wonderful day, and we will see you next time around. All right. Take care. Bye bye.